Morning, guys. This is Trader Genius, and I'm Rob. And you are watching my screen for another trade-isode. I'll be day trading options this morning. The market just opened a minute or almost 2 minutes ago. And my procedure for this early in the morning and day trading is, hey, it's extremely volatile. A lot of traders in the club follow this approach, and the coaches as well, just because there's a lot of settling of the overnight trading action. What does that mean? Well, you can certainly Google it. We talk about it in a lot of our educational series videos. Essentially, there are some people who have the privilege of trading overnight. So, some internationalists, some folks with institutional access to overnight trading. And yes, if that sounds fishy, yes, they can trade while you and I cannot. So there are special privileges to changing share prices overnight. And in light of the recent GameStop fiasco, and which is still not resolved, I'll just leave it at that. Some people can trade overnight, some people can't. I'm not one of them. So there's a lot of share prices that can move overnight. We call those gaps between the open price and the close price. Open price of yesterday, close price of today. And those can affect the market. These first 5 minutes, at least, it takes for those gaps to settle down, and any kind of reactions from investors or institutions in the morning. A lot of the wild order filling gets conducted in those first 5 minutes. So I'll wait till 9:36 Eastern. It's currently 9:33. This chart right here you see in the center of your screen is, let me expand this a little bit. Chart that you see to the left of your screen is the main chart that I'll be using to tell whether a stock shows the behavior that I want. I'm bringing in my meter right here. This is a helpful market meter. Tell me what the overall market's doing so I can get some market support in the green or the red direction. This little round bubble in the top right of your screen does the same thing for me, but in a different way. So I'll use that to tell the tenor of the overall market, and then the chart to tell if a stock is showing, or index is showing, the behavior I want from my rules. Boeing here is breaking up above 210. That's a nice sign, or at least it's peaking. Spreads are a little bit nasty over here on the quad. This is the final piece that you can see. It's the option quad. That tells me, hey, what the pricing action is for the nearest in the money and out of the money call, and the nearest in the money and out of the money put. I have a couple more indicators off screen that I'll be using to tell what's happening on a multi-day aspect, and again, what the overall market's doing, if I'm nearing any highs. And we can check that out real quick. We've got SPY here, the S&P 500 index. And if you look at the top in this faint lettering, you can see 52-week high, 20-day break above. That is an all-time high for the SPY. It's still about $3 away, so we're not there yet, but it's in play. Dow Jones is not quite as high to, or as close to its 52-week high. IWM, you can see a 7-day break above up there at the top. And then QQQ is pretty close. You can see that again at the top of your screen. It's got its all-time high right there, stacked on top of that previous high, stacked on top of 330 a share. So that one might have some trouble breaking that ceiling, but we've got some other stocks: Boeing, Apple, Microsoft, Facebook, Roku, and Netflix today. I generally keep some of the same movers in my basket, but I'll change that up depending on earnings, it is earnings season. Fourth quarter earnings are rolling in for a lot of companies. Based off of the behavior, recently got rid of Disney because it was just kind of cycling and not exhibiting the behavior that fits my rules. So this morning, instead of talking so much about the technicals, you'll watch me trade in this trade-isode, but instead of talking so much about those, I'll be talking a little bit more about the mindset. And the mindset that's most helpful is to keep it simple. there's only two actions that we as traders need to execute in order to be traders and run a trading system and have that trading system deliver an income for us. It's buying and it's closing our positions. So you get in and you get out. It is that simple. We tend to overcomplicate it and introduce ego, and by introducing ego, we introduce a lot of emotions, and trading emotionally brings in a lot of risk to your system. That's not where I want to be, and I'm pretty sure that's not where you want to be. You want to be able to kind of flow and be agile and get into and out of trades without entanglements of your own inner workings here, your circuitry going haywire and leading you astray. That's the importance of trading with a system. Systematically, you're just looking for the same set of rules to be met in order to tell you, hey, this is a good situation to move forward. So right now we're getting some nice red market support. That's the first check in my box. If you're not familiar with options trading, you can make a profit on green moves, i.e. if a share price, a stock, or index is moving up in value, you can trade calls to make a profit. Or if something's moving red, like Apple right here, you can make a profit on puts. And those are, you can research those. There's plenty of videos on Trader Genius, but puts gain value as the share price goes down. The underlying stock price goes down. And we'll just leave it at that. It's a contract. It's totally legit. You can make money on the way down. You can do it long term, or you can do it short term. I'll just be looking for a couple minutes or less move on Apple. Oh, not necessarily Apple, but on any of these stocks that might break down in a red move. And let's see, and Netflix touched that previous low. Now it's finding some support there, bouncing up. I'm looking for volume as part of my rules, part of my process too. So just to cue you in on the simple indicators that I'll use for volume, it's these purple and yellow histograms along the bottom, as well as just the fatness of those candles. Those are nice, powerful, high volume candles. And they tend to cut through resistance or support, punch through ceilings and floors in the price action lingo. Here comes Boeing, making another run at 210. It does have some volume. The volume was increasing here, and then it kind of petered out. But each time the volume ramps up, we're getting sent down, back down red a little bit in the price action. So we got kind of a flat, undecided market. It's in transition right now. Looking at Boeing, it's going to be fast if it happens. It's been pretty. Yesterday was pretty. There was a lot of disagreements between the bears and the bulls on Boeing, and the price moved pretty fast in the morning. So I'm anticipating that kind of behavior now. Getting a little bit of a green tint to the market. Let's see what Microsoft is doing. They're popping off, trying to break into new territory for the day. Dow Jones is moving up. Facebook sideways. Roku pretty sideways, although there's some decent size to those candles, fatness, so we'll look at it. Netflix, I'm actually going to take that off my list because if you're an options trader, look at those spreads. It's not what I am into. Boeing, still thinking about it. Apple, we were watching it. It has some really nice, strong red indicators coming on to my candles and on my chart. But it found support, a floor, around that 135 mark, that benchmark. Facebook not doing much. Roku. The indexes are flat. SPY has 0 volume. It's registered so far. Dow has a little bit. IWM really nothing. QQQ a little bit. So those 4 major indexes give you a nice picture of the overall stock market and what that's doing. So we'll keep an eye on those. We want at least some kind of action, some kind of price action in order to be able to make a profit as a options trader. Here we go, Boeing. It's setting up nicely. Could be breaking out to a new high. We'll just keep an eye on it here. Nice. Okay, let's get into Boeing there. Not filled. Okay, we're in. See, the indicators came on, signaling a nice strong move for Boeing. Buyers are there. They came in with volume. Pushing it, challenging 211 a share. We'll see how it behaves around that mark. If it provides a ceiling, some resistance. Might be a quicker trade. Okay, we're busting through. Busting. 211. Okay, it's looking nice. Good indicators following through. And we're out of there. Okay, so to recap, we entered on this big volume candle right here. We exited at the top there. Took a couple fills to get us out of there. But let's take a look at it. We had some very minor market support, so it's not as much as I'd like to see, but we actually saw a similar behavior to this around the same time yesterday, and it was just an obvious, clear and obvious breakout into a new territory for Boeing for the morning, and it had the same display or same paint on the chart. Boeing really has a lot of eyes on it. If you followed the stock for the last year, it tanked pretty hard when there was the big COVID drop off. It used to be 400 something a share, dropped as low as like 90, 95. There were some good stock trades to be had last year on that. But Boeing is now about half that. It's been flirting with 200 to 230, and then in the 185 kind of range. So it doesn't really know what to do around this 200. But there are a lot of eyes on it, and a lot of people who can move stock prices are trading shares on Boeing. So we'll just put it that way. And when Boeing popped off right there, I was talking to you about it. Hey, if it sets the high for the morning with the right setup, with the right indicators that I know because I've trained to use them, and that's how I could tell that this is a move that's tradable. Maybe a quick one. We don't have a lot of market support, and we don't have a lot of movement on the indexes, so you don't have that undercurrent to carry your trade forward. It's just on the buyers of Boeing in this case, and they ran it up pretty nicely. The exact share price of when we got in and got out is less important than the timing of us buying the options in this case. So I chose the in the money call. We didn't get filled. Ticked 1,000, 1,000. Cancel that order, resubmit a new one. I went out of the money and I got filled instantly all the way. And then on the way out, there was already some disagreement between the options buyers and sellers. Again, we are trading the options market. It's a level above the underlying stock. And it took a few seconds for us to get filled. But really nice profit in a very short amount of time. And that's ideal. Stick and move. Be agile in your trading. If you want to trade this style, everybody's got a little bit different way to approach this. There are plenty of people who do really well in Trader Genius and without Trader Genius on longer term options. If you're going to do that, then you have to be willing to tolerate some flutter. Like, I like this part of the trend right here. Up, higher highs, very, very nice, consistent painting on my chart using my indicators. I don't want to be going up and back down and then up again, and then who knows what's coming in the next candle. So we got in, got out. This one, the exit on this one was very much a profit-based exit, and realistically, just knowing from experience that the longer you hang around in a choppy, possibly choppy morning, flat indexes morning like this, then the higher the chance that you're going to have to ride out some of that turbulence. And that's not what I'm interested in. So we had a nice gain, took the sure thing, and now Boeing can go back to $400 a share this morning. I might get back in on it if it does that, but In this case, we got in, got out, and I'll be able to log this trade and examine it. We have a simulator that a lot of us replay our trades the day after or the evening after you trade it, just to see if there's anything that you missed. But right now, I can tell you that was on process, had a huge change in behavior, fresh trend, popped off, got in and got out with some fat candles and some great paint on my charts, and some good indicators a little bit off the screen that are pretty special. If you ever want to inquire about the tools that you could use, check out Trader Genius. There's some great videos that'll just walk you around the software, and you'll get to meet some of the badass people that volunteer their time to make the club tick. We're trying to do some good stuff for good people. But yeah, really, this trade of soda is about mindset, and it's about you saw it right there. Keep it simple. Get in, get out. Buy, close. If your buy is not working, reset. Weapons malfunction, go ahead and try again. Butta jam. On the exit, yeah, we got filled in a couple waves there, a couple salvos, but we were able to exit on time, and we didn't ask for too much. And you can see right here at the point where we exited, and we saw this wick coming in. That's where it's been channeling, and the sellers decided to put their foot in the ground and make their stand right there around 211.5. So in retrospect, it was a good exit, but really it's not about me knowing or a trader knowing what candle is going to come next. It's about following your process, following your rules, and understanding that, hey, the longer that I'm in a trade like this, the more my risk increases. So that mindset, it's crucial. It's what we train for in the Trader Genius coaching program. It is 80 to 90% of the equation when it comes to consistent trading. Most rules and tools, I mean, even some of the older antiquated indicators like MACD, you can make a system around them and you can be effective with it. But most of the struggle and the traps that you fall into are right between your ears. You have to keep the right mindset going into this. Don't try to make it, don't let the ego in. The number one way that happens is if you confuse this for gambling or video gaming, or if you make it out to be some Hollywood morning or some Hollywood script. I know that was one of the things I struggled with, that I'd have to rise to the occasion. Coming out of the Marines, I mean, you sound reveille. As soon as the lights turn on or the sun's up or somebody's shouting at you, hey, get up, or crack a gunfire, you're up and moving, and you better be moving with a purpose. But that doesn't translate so well here. So if you're getting pumped up and getting, juiced and jacked up for simple trading, clicking twice, clicking buy, clicking close, then man, you're really taking yourself out of the most effective mindset, which is calm, cool, collected, taking a professional approach to this. There's no Hollywood ending. You're not going to get kissed by the pretty girl at the end of it. You go about your business. You be professional. You get in, get out, and then you keep the books on your business. Go log your trades, even the gains. Log them. Log them consistently in the same manner each time. That helps you track and measure the variables that are important for you to grow and evolve as a trader. If you want to stay at the same level of maturity as a trader, well, then don't log, and you might get inconsistent results. But if you haven't ever tried keeping a trade log, just give it a shot. It is really, really effective. And what I end up telling other members in Trader Genius is it's like having a conversation with yourself that you otherwise wouldn't have if you didn't have that simple spreadsheet in front of you. And you're tracking the measurables of the trade as well to determine if you're in your trade for too long, let's say. We were in this one very, very quick in and out of this Boeing trade. If you're letting it run too long, you should be able to see that because you can, over every 100 repetitions for, let's say, you can check on what your average time in trade is, and just say, hey, look, on the higher end of the spectrum, if I go more towards 2 or 3 minutes, those have a higher chance of me logging a loss than if I'm in and out in 30 seconds or 60 seconds, something like that. The shorter trades tend to be my more profitable ones. You make those correlations between the variables and the measurables that you're tracking, and then you're able to take that information and arm yourself with that information for the next trade. It's not about this trade when I log it. It's going to be about tomorrow's trade and next week's trading, and all my trading going forward is predicated on me growing and getting the right information at the right time in the form of my trade log feedback. So that's the trade episode for today. I'll hang it up there. Takeaways are: wait for your moment and don't jump the gun. Stick and move, get in, get out, and just be in a trade during the best part of the trend. That's my mentality, that's my approach, and it's pretty effective. And number three, and most importantly, mindset is 80 to 90% of this. Do not let your ego tell you that you need to get pumped up and drink a bunch of caffeine to execute your trading process. No, take a professional mindset. It's simple: buying and closing. Don't overcomplicate it beyond that. You buy when your chart and your indicators tell you that the risk is lowest for buying, and then you close when it's time to go. When those same indicators and paint on your chart are telling you that this stock or index doesn't have any more to give. So professional mindset, treat it like a business. And hey, bonus, try out a trade log. If you haven't done it so far, and if you don't know how to get started with one, hey, just hit up info@tradergenius.com, and one of us will shoot you over a spreadsheet that you can use. But yeah, try a trade log. You will most likely be floored by the amount of helpful feedback that you get out of it. So take those lessons with you. I hope you enjoyed this trade episode. We'll be doing plenty more of these, as well as some other videos. I did a mindset video on greed yesterday that I need to get published. So you guys will see that up on the channel soon. Yeah, spread the word, tell your friends. Hope to see you guys around the club. Take care.